Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. As I'm sure you're aware, there's a lot of turmoil, a lot of turbulence going on in the markets, and we really need to make sense of what is currently happening. And the way to do that is always to have a look at the charts on a longer term time frame, and also when you zoom out and have a look at the last 10 or 11 years history with Bitcoin. So in today's video, I'm going to try and make sense of what's currently going on with all the turmoil and the turbulence now by having a look at all the three cycles that we've been involved in the last 11 years or 10 years of Bitcoin. And instead of doing a wisdom bite at the end like I normally would do, what I want to do today is to actually have a look at Ethereum, because a lot of people ask me to cover some of the altcoins, but there's no point in covering the altcoins under current circumstances because we need to see what's happening with Bitcoin and Ethereum because they're the drivers of the altcoins. So we haven't had a look at Ethereum for quite a while, so I'll have a look at Ethereum and some opportunities that are there for those with a discerning eye. So if that sounds interesting, then without further ado, put everything aside, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking straight away. And before we start, just a normal disclaimer. Please remember, everything in this video and all my videos are for educational purposes only, and nothing should be taken as financial advice. Please do your wider research and due diligence to make sure that when you come to make investment decisions, you've got all the information available so you can take account and be responsible for the decisions that you make. So we're going to start off with this BLX chart, which is looking at the inception of Bitcoin all the way through to currently what's happening here. What I want to highlight here is that before each of the halvings, here, here, and here, we had these tops, which were your peak of the cycles. Something very interesting in these cycles seems to be repeating exactly over here currently to what's happened in the first cycle and the second cycle. And I'm going to show you that by looking at the Fibonacci retracement. So before the halving, if you look at the peak of the cycle there and take it to the bottom, you'll notice one thing, and that is that at the 4.236% Fibonacci retracement level, what we got here at that point was the penultimate high before we had the blow off top. And that blow off top, once we broke this level here at the 4.236, it was basically 2 months before we reached the top. But even more interesting that at this point here, we had a big correction here of around about 75%. And once we broke this neckline with this candle here, we can see that the blow off top was within a few weeks later. And what we got was from this point where it broke the neckline at the 4.236, we got a rise to the end of the bull market there of around about 800%. But when we were down here, it didn't seem possible because just like currently at this point, when everybody was selling and people were in turbulence and in turmoil, people were thinking of selling at these points. Little did they know this was about to happen. If we have a look at the second halving cycle, the halving happened here in July 2016. And if we take the peak before this halving, which was here at the blow off top in 2013, to the bottom here, again, something very, very interesting occurred. If we zoom in here, at the second cycle, you can see that at the 4.236, once again, we came to this level, and that turned out to be the penultimate peak before the actual blow off top here. And once again, when we reached this level, we had a big fall, this time of around about 40%. And once again, once we broke this peak line here, at the 4.236, within 1 to 3 months, we had our blow off top. Now, did people at this point here think that this was about to happen? Because as we know, whenever there is a 30-40% fall, there's a huge amount of turmoil and turbulence, because we know from the fear and greed index, it goes down to around about between 10 and 20 at these levels here. And we covered that in last week's video, that those tend to be the best times to buy rather than to sell. So those two peaks correlated very strongly, where the 4.236 Fibonacci level was giving us a clue that that is the penultimate peak and rejection with a correction before we have a blow off top over here. If we move on to the third cycle here, we can see that we got our halving back in May 2020. So the peak before that was the 20,000 back in 2017. And if we do a Fibonacci retracement from this peak to its bottom following it a year later, it gives us a clue as to what's currently happening. So once again, at the 4.236 level here, we didn't quite make it to this level, but we all know that Bitcoin doesn't repeat exactly, but it rhymes with previous fractals and previous cycles. But once again, what we've got here is another correction to the downside, creating the turmoil, creating the turbulence as we've got currently at the moment, which we're all having to navigate through with our emotions, etc. So the current fall from this peak of 69 down to currently where we're at, it's been down to around about 41%, which obviously is familiar with what's happened in the previous cycle. So once again, at current levels, nobody thinks that a peak is about to come. In fact, many people are saying we're in the middle of a bear market and that we're waiting for a 50, 60, 70% correction, all the way down to 28,000, maybe even lower. And of course, that is possible. Nobody can deny that. My job is to look at what's happened in the past and to correlate with what's happening currently, just to understand where we're at. So when we get a confusing picture, which we've got now, and we're all finding it emotionally as well as financially, to try and navigate our way from understanding where we are currently to where we think or feel the market may go, then the only way to actually get some sort of reassurance and understanding of where the markets could go is by looking at what's happened in the past, because we know that by looking at the past, it gives us a very strong clue as to what could happen in the future. And it's interesting actually that this is the first time we're actually falling below in the correction, below the 2.618. So having had the correction from the 4.236, we seem to be just about losing this here. However, this is a monthly chart, so we'd have to wait until this candle closes below this. Otherwise, as has happened in the previous two cycles, if we have a look at those, that when it comes to the 2.618, it can wick below it, but at the end of the month, it goes back up to cover that peak again. But before I show you that, what I'm trying to get at is that at this point where we've had this big correction of 40%, nobody thinks that we're going to have a blow off top in the next few months. In fact, it's probably the furthest thing in people's minds at the moment. And that's when Bitcoin tends to hit the big rallies. I'm not saying it's going to happen. All I'm saying is that these are the same emotions that drive people's decision making and thought processes. And the current thought process is that it seems very unlikely where we are now that within the next 2 to 3 months we could possibly have a massive rise to the upside. Only time will tell. I don't have a crystal ball. I don't know which way the market is going. All I'm trying to do is provide some sort of a perspective out of all the confusion, all the malaise, all the turbulence and the turmoil out there, trying to make sense of exactly where we are without the emotion. We've got to be emotionally intelligent, not to get swayed by these emotions here and make the wrong decisions. So like I said, the 2.618 is where it normally bounces from, and the last month's candle was exactly at that point, but the current candle has just peaked below it. And if we have a look at cycle 2 again, you can see that we topped off at the 4.236 and we came and found support just above the 2.618. So this is where we're currently breaking in our current cycle, but on the second cycle, it didn't manage to get as far down as the 2.36. However, if you look at cycle 1, we can see that when it peaked at the 4.236 here, it actually came back down below the 2.618. So obviously during the month, it was well below just as it is currently in our current cycle. So it may well be that just like this cycle here in cycle 1, where it actually came back down below the 2.618 here, by the end of the month, it had actually been bought up well above the 2.618. So only time will tell, but it's very interesting that what's happening currently, to make sense of it, to get our head around all the confusion, etc., when we look at the first cycle and the second halving cycles, we can see that there is a lot of correlation between what happened in the past to what is happening currently. So in essence, if we come back to our current cycle here, what we really need to do is to, first of all, get above this 2.618 line here, which is at 46,600. So by the end of this month, we really need to end this month above this 46,000. Then that would correlate very nicely with cycles 1 and 2. And secondly, we need to get, before we can have a blow off top, we need to get above this 4.236, which is at 73,490. So anything around 73,500 around here. Once we break up above here, then we're good to go for a blow off top. And that will be actually one of our other signals to say that we've now had our consolidation over here, and now we're good to go. Now that could happen in the next 3 months or 6 months or whatever happens, but certainly it's a good indicator that once we get above this 4.236 level at 73.5, then that would be the signal for us to know that we're going to be leaving this consolidation behind and moving to much higher levels. Okay, moving on to the HYG, which is the junk bond market. I've been showing you this virtually every single week, that this is something we must keep our eye on, simply because this will be the trigger for the fall in the Dow Jones market when that happens. And as you can see from last week, we've got a big red candle that's moving towards our concerning level, which is around about the 85.5 level. It's at 85.8 at the moment, but the critical level is obviously at 83. So it's now moving in the wrong direction, but as we've seen before, it can come down and then go back up again here. So it may just be hovering in this range around here. But the main thing is to actually just keep our eye on it. As long as we don't break this green line here, this 85.5 level, then we shouldn't be too concerned with it, but certainly to keep an eye on. So just to wrap up with Bitcoin, I'm going to give you a few levels. But before I give you the levels, just want to do a Fibonacci retracement here to give you some sort of an insight of where we are currently. If we do the Fibonacci retracement from this low that we had here at 28,800 to the high all-time level here at 69,000, we can see that we came down to the 61.8 golden pocket around here. And this is where it's been hovering. But obviously we've now just started to go below that. The reason why I want to show you this is because I've given you this level here, this line in the sand at 39,600, this wick down here. However, the Fibonacci retracement on the 78.6, this level here, comes down to these levels here at 37,400. So this is a level, just to keep your mind, that could well be it bounces from this level rather than the 39,600 level. So these two are very important. Just in the next few days, maybe it might just test those levels. In the shorter term, this red ray line that I've drawn here for you, this corresponds to the bottoming out at this point on the 4th of December. And obviously since then we've gone up there and come back down to retest it again. And this level is at 42,333. Now what I was hoping was that when we came down to retest this, that in order for us to get a bounce here, what we really needed was that within 24 hours, maybe at the very latest 48 hours, we would wick down and then climb back up above this 42,300 level. However, as you can see with the long wicks there, it's not managed to do that. So that to me is a very important sign that it wants to go lower. So until the market gets above this 42,300, we're still in a downward trajectory. What I would like to see is at least a 4-hour or a daily candle closing above this level here at 42,300 before we can say that we're now back on the upward trajectory here. So I'm just looking at signs of a reversal anytime soon, but judging by these candles, it doesn't give me a lot of optimism to see that they're not getting above this level here. So maybe in the short term, we will go a little bit lower, especially to this level here at the 39,600 level, which takes into account this wick here. So what I'm expecting is a big bounce from this level at 39,600, or like I said, with the Fibonacci retracement, it seems to be having a confluence with these levels here at around about the 37,000. So these are the important levels to look out for. at 37,300 and 39,600. Those are the potential bouncing areas from here. And of course, if it breaks down these levels, then we're really going to be going much, much further down to the $28,000 mark down these levels here. And to the upside, should we bounce from this level here, which I'm expecting around 39,600, if you do a fibs from the top to the bottom here at 39,600, it's amazing that the 61.8 comes back to those same levels that I've been giving you for the last many weeks and months, and that's at the $58,000 mark here. So this is where we're going to be able to get a bounce to. But certainly this level here at 52.53 is also going to play a critical role. So these are the real levels to the top, 52.53 and then the 57.58 level mark here. The main takeaway from the analysis on Bitcoin is that really there's a lot of confusion, there's a lot of malaise in the market, a lot of fear. And what I've tried to do, make an attempt, is to just give you an insight from different angles as to which way the Bitcoin market is going to be going, and to make sense of this fall that we've just had. And the only thing we can do is to ride it out, remain patient, and wait for the market to tell us what we should do. If we move on to the Ethereum chart, very similar picture to Bitcoin, but we need to have a look at the levels that it could also bounce from. And as we saw on this weekly chart here, and I've drawn these in the past before, but we haven't covered Ethereum for a while. So previously, this was the all-time high in January 2018. And then we had this W pattern here, came up to this neckline. And once we broke it, we've now currently, since about October 2020, we've been in this upward trajectory in this current bull market. If I take these levels out, we can see a bit more clearly where the current picture is. So this red line is the long-term trend line for Ethereum. As we've got one touch point here, a few touch points here, support and resistance here. Again, once we broke that, we went to the upside, came back and retested this. And once again, we're breaking down around these levels. As we saw here, there was a wick down here. So it may well be that at the end of this week, which is tonight at 12 o'clock, it may well wick back up again. But certainly it's a very strong trend line in the history of Ethereum. And the shorter term trend line is this blue line here, which obviously we've clearly broken there. However, what we have done since this bull run started is that we've created a high and a higher high here before we've had this fall. So once again, it doesn't have the characteristics of what we would term as a blow off top. So for me, this is still a short-term correction before we move to the upside. And as you can see, it's forming this W pattern as well, just like Bitcoin. So if we have a close look at this point here, we can see that the main level to look out for is the bottom of this wick here, and that would be at 2,656. And that is if we break this white support line here. As you can see, there's a lot of support on this white line, and we're currently finding support exactly at that level here at about 3,000. Should we break this 2,600 level, it may well be that we come back to this wick here, which is around about 2,790. These are the levels really to look out for with the bottoms of these two wicks. I would suggest it's the last one, which is the more likely, because if it's going to fall from here, it's going to test the nerves of everybody by going to the last of the support levels here. And as you can see, if once it breaks this level at 2,600, there isn't very much support level until we get back all the way down to 1,700 here. And this was the level I gave you when we were around here, that this is the level to buy back if you're interested in Ethereum. So 1,700 was exactly where it came back down to. So this would be the last level. I really can't fathom breaking down below this, because if you look at the fall from the top here to those levels, that would represent a 63% fall. That's basically bear market falls. And currently, we've already fallen around about the 38% level, just very similar to Bitcoin at 41%. So let's wait and see what happens with Ethereum. But certainly on the low side, you've got 2,600 to 2,700. And then the last support level is at around about 1,700. But what you will get is a very big bounce to the upside. And if we have a look at where it could bounce to from the top here, and if we take it down to the 2,600 level, which is what I'm expecting it to go down to, then the 61.8, which is where I would expect it to bounce up to, is at around about the $4,000 mark. So that would take a bounce from 2,600 to the $4,000 mark of a very quick 51%. So certainly if I had some cash, that's where I would actually put my buy order, around about the 2600 level. Let's see, wait and see. Only time will tell. I don't have a crystal ball. I'm just giving you my perspective of what I'm seeing in the charts. So that would be the main target to the upside at around about the $4,000 mark. A quick look at the RSI for Ethereum suggests that we may have a little bit more downside here. As we can see, it's about to enter the zone of 30 here. So that's why I'm thinking that there may be a little bit more downside with Ethereum to come down to the 2600 level before it turns around to the upside. Okay, so that's all we need to say about Ethereum. It would have been nice to have done a wisdom bite. I was going to do one on goals and objectives for this year, but certainly with all the turmoil and the confusion going out in the market, it was better to cover this and to keep our focus on exactly what's happening in the crypto world with Ethereum and Bitcoin. So hopefully things will resolve themselves in the coming week so we can have an opportunity to do a bit of a wisdom bite at the end of the next week's video. So let me know what you think, what your take is on the current confusion and the falls in the market for both Ethereum and Bitcoin. I hope you'll share your views and perspectives with everybody here in the Wisdom Bites community. I've given you my perspective and I hope you found value in both of the analysis that I've done. And if you did, then please do remember to like and subscribe. And if you want to leave any comments, questions or suggestions, then obviously leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.